In day trading, there are a lot of reversal patterns, and the V reversal is one of them. V reversal normally leads to the second or third leg, so it provides good opportunities for both scalping and swing. So in this video, I'm going to show you how to identify the V reversal and trade them. Let's get started. I'm going to cover the following topics. Number 1, V reversal basics. I'm going to show you the characteristic of a V reversal. Number 2, the V reversal in day trading. I'm going to show you the setup, entry stop, and the profit target. Number 3, I'm going to use some examples to show you how to trade V reversals in day trading. What is V reversal? Basically, at a glance, you can see that it is a V shape or flipped V shape. The basic thing about V reversal is, at the top or the bottom, it is V shape, it's sharp. There are a few characteristics for this V reversal. The first is the reversal should be sharp, which means the market should bounce back very quickly. And the second, for the bounce back, it's better to be the breakout pattern, which means they are consecutive either bull bars or bear bars. Also, it is better that the V reversal accounts for your whole screen, which means if you're doing day trading, the reversal is for the whole day pattern. Last, there are more V than flipped V, which means normally we'll see a more like the downtrend in the beginning and then it reverses back with the uptrend rather than the opposite way. Now let's move on to the V reversal setup. Let's use V rather than the flip V for example, even though they are sharing the same logic. First, we want to see a downtrend. We can see that here's the downtrend, and then the market reverses immediately because there's a doji bull bar with a tail at the bottom. And then we want to see breakout mode, like the consecutive bull bars here, that we can see there's, including this doji bar, there's 1, 2, 3, 4, 5, 6, 7 consecutive bull bars. And then we want to see the bull bar breakout take out the previous major or minor high. So here is the major high. That is because we have a high here, we have a low, we have a lower high, and then we have a lower low. That's why this is the major high. It's taking out this major high. So this is the setup for the V reversal. Now let's move on to the V reversal entries. Basically, we want to wait for the pullback and trade the pullback. So in this example, here comes one single bear bar. This bear bar can serve as the pullback. And then we want to wait for a very good signal bull bar. So here comes a very good signal bar because the body of this bull bar accounts for over 60% of the whole candlestick. You can also choose other candlestick like this bear bar, but the probability for the timing of the uptrend will be lower. And then there could be 3 pushes before the trend actually goes up. That means after this bear bar, you can expect another bear bar or a third bear bar before it goes up. And then even in this chart, you can treat this as the first push, this is the second push, and here is the third push, and then with a very good signal bar. Really depends how you interpret this chart. And last one is, it's better that you wait for the signal bar to finish before you enter, because in the development of the bar could really end up with a bear bar or bull bar. You never know. It's better to wait for the bar to finish. In terms of the V reversal stop, there are a few options. The first one is, if you assume this is the pullback bottom, you can place the stop at the bottom of the pullback here. However, the thing is, the market might not go up right away, so it could really get you stop out here. Second, you can put in the halfway of the bull breakout here. Basically, if the market reverses back half or 50% of this whole breakout, it might not be a very strong market. So it's possible that the uptrend will end, or it is not a real V reversal. because even for V reversal, there's a probability of winning ratios. And the 3, you can put at the bottom of the whole V reversal here. That you will give more room. However, if you get stop out, you're going to lose a lot. So in terms of which one to choose, you should really study the chart of your financial instruments you're trading on and then make a decision by yourself. For the profit target, there are also a few options. The first one is N times your actual risk. Previously, I mentioned the stop. Those are the protective stop. Your actual stop should be at the bottom of the real pullback whenever the trend goes up. And then in terms of this N, it's really based on your study. So for the scalping, normally it is between 1 and 2. The second option is use the previous high. This previous high can be the previous day's high or the previous high in today's chart. For example, here, this high is the previous high in the same day. We can use this as a profit target. Number 3, we can also use the pivot level. So for example, here we have the R1, so we can use this as the profit target as well. Number 4, we can use measure move. Basically, for measured move, we want to measure from the bottom of the first bull bar, which is this doji bar, and then measure at the top of the last bull bar for the first leg. And then we measure the same thing from the bottom of the pullback and then the same distance. And here should be the profit target. You should select the one that is the most reasonable and practical and also based on your trading strategy. In terms of how to use the levels as the profit target, I have another video in my channel that you can watch for more information. Now let's move on to the last part of the video. Let me use some trading examples to show you how to trade the V reversals. Let's take this chart for example. First, we want to have the levels drawn on the chart. Here is the previous high. It could be previous high in the same day or it could be the previous day's high. And then we also have some pivot levels. This is the PP level. Then the market goes down and then there's a V sharp here. Then we observe there are 4 consecutive bull bars breaking out the previous major high. That means we're waiting for the pullback since this is a V reversal setup. And then here comes the pullback. We have 3 consecutive bear bars here. And then we're waiting for a signal bar. The next bull bar could be served as a signal bar. However, it is not a very good signal bar because the body accounts less than 60% of the whole candlestick. You can also see the market didn't go beyond this bull bar. And next, we have another bull bar after another bear bar. So this bull bar is a very good signal bar because the body accounts for more than 60% of the whole candlestick. Then we put our entry order, a buy order at the top of this bull bar, and you can see the market just takes off. Another thing you should notice is that we have the level PP here. This level here, we can see it serves as the support level. And then the market goes back here and then go back here, touches it, and then this level serves as the resistance. And then the market penetrates it again and then pulls back. It serves as the support again. So this PP level is a very strong support or resistance level. So whenever you see something like this, there is a high probability that the trade will be a good winning trade. For the stop, we can put at the bottom of the V reversal here. We can also put halfway. However, because this pullback is too much, we can select the stop to be the bottom of this big bull bar here. And also you can put a little bit further below this pullback to give it a little bit more breathing room before the trend continues upward. Right after the market takes off to the upward, you want to put your stop right below the pullback. So basically this is your actual stop. And then your entry is the top of this bull bar. So your actual risk should be from the bottom of the pullback to your entry level here. So this is your actual risk. Let's have a look at the profit target. If we use the 1 time of your risk, we can see that the profit target is here. If we use 2 times your risk, you can see that the target is here. In this case, you can see that the market didn't reach the 2 times of your risk. However, if you scalp for 1 time of your risk, you're gonna get a profit. Let's also do a measure move. So we measure from the bottom of the first bull bar rather than this bear bar. And then we measure until the top of the last bull bar rather than this top of this bear bar. So this is the first leg. You want to do the measure. And then we measure from the bottom of the pullback and the same distance here. This is the measure move profit target. You can see that the market reaches the profit target for the measure move and then pulls back, which means the other traders are using the same measure move technique to take their profit. That means if you don't take your profit and you're waiting for the market to go even further, so your profit target might not be reached. So you should be very careful about the profit target. You can also use other levels you identify on the same chart. For example, here we have 2 highs. This one is a previous major high here. This is the previous high in the same day. Both of them can serve as the profit target. However, you can see that only this previous high is met here. And then the previous high for the same day, the market never touches it. So that means if you put your profit target as the previous high here, then you won't take the profit. And then the market can just reverse, and then if you don't manage your trade well, you could end up with a losing trade. Let me also show you how to use other information on the same chart to help you to do the trading for V reversal. So let's take a look at this chart. First, we have a previous low here, and we also draw the pivot level here. So this is a V shape here, the previous major high, and breaks the previous major high, we enter at the pullback. And you can see that here this PP level serves as the profit target. It's met. However, the trend goes even further. Why it goes even further? We could have some clues here. The first thing is we have the previous low drawn here. This level, the market comes down to test this level but failed. That means this is a very good support level. We're expecting the market will reverse. This will increase the probability. And the second thing is, if you notice here, before the V reversal, we have a trading range here. The trading range doesn't go anywhere, and then there is a lot of overlap of the candlestick bars between each other. And then this also increases the probability that when the market moves, it could move even further. So that's why this part beyond the PP level, it is explained by this support level as the previous low and also as the trading range here. Here's another example. You can see here, it doesn't seem to be a V reversal setup because you can see there are multiple bars, 3 bars here. However, this is a 5-minute chart. If you go up to some higher time frame, this is the 15-minute chart, you can clearly see that this is a V reversal. So basically, when you do the day trading, sometimes you have to switch between different time frames for you to do the day trading. Let me show you another example of using multiple time frame. This is the 5-minute chart. However, you can see it is very choppy here and here. There are a lot of overlaps between the bars next to each other. It is hard to decide sometimes. Then you can go up to the 15-minute chart, and in this chart you can clearly see that this part is clear and this part is also clear. So in the 15-minute chart, you can see there are multiple signal bars that you can use. So rather than a lot of noises from the 5-minute chart. Here's another example of the V reversal. However, what is special about this chart is that you can see the trend, the downtrend is not very straight down. So we have a pullback here and then goes up and down. However, later on, you can see that the market takes out this previous major high and then we can enter here. So this is not a very perfect V setup, which means the probability of uptrend will be decreased. So the market could really go up to test this high and then reverse back. Let's take a look at this example. Clearly we can see this is a V reversal here. However, this V reversal doesn't go up even further. That is because this V reversal does not count the whole screen. Like I previously mentioned, it is better to trade the V reversal, which is the whole pattern for the whole day. However, in this chart, this daily chart, we can see that this is definitely a trading range. And then this V reversal is only part of the whole trend. That is why the probability of the winning trade is very low. Now let's have a look at the flipped V reversal example. Take a look at this chart. We have an uptrend here, and then we have a V-shaped reversal because we have consecutive bear bars here. And these bear bars will take down the previous low here, and then it moves downward. This bull doji bar can serve as the pullback, or these two bull bars can serve as the pullback. Then we enter here. So the trend continues downward. For this chart, we can see it is a V reversal. This is the previous minor high here, and then we enter at the pullback. Even though there's no bear bar here, however, this bull bar with a big tail at the top is the pullback. We can enter here. However, you can see the market doesn't go very far, and then it goes back to a trading range. That is because you can see the pattern here is there are consecutive bear bars here. So this downtrend is very, very strong. That is why the V reversal here going back up, that is not strong. So this is something that you want to observe while the market is developing and make a decision whether the reversal is strong or not to set your profit target. Let's take a look at this example. We have the V reversal here, and then we enter at the pullback. However, the market only goes down here, and then it didn't go down further. That is because if you take a look at the previous high here, this is the London Open, and this serves as the support or resistance level. So this is a very good example if you are trading the currencies, especially you are trading GBP or Euro. So London Open could be a very good level or target for you to take. In this example, this is a V reversal. And then we have consecutive 1, 2, 3, 4, 5, 6, 7, 8 bull bars, which means a very strong uptrend. However, when we have the pullback here, it becomes very choppy. That is because we have the first push, second push, and third push. And especially the second push, it wants to go down further. That means there's a pressure from the seller. So that's why when you see the trend continues up, it doesn't go any further other than here. And then it pulls back again with a very choppy pullback. So when you see this kind of a pullback, choppy pullback, you're not expecting the uptrend will go even further, even though we have a very good start of the consecutive bull bars here. Let's take another example in reading the pullback. So here's the reversal. However, we can see the pullback here is horizontal, and it didn't go further back up. So when the market moves again here with 4 consecutive bear bars, that means the market starts moving even further. What you can do is that you can trade when the pullback comes. So you can see this bear bar can serve as the signal bar, and then the market goes down even further. So comparing this chart and the previous chart, you can see the pullback can really tell us the market movement. The previous example, the market pulls back too much. However, in this example, it pulls back horizontally. That means this trend is stronger than the previous trend. Let's take a look at this chart for the pullback. So basically, we have the V reversal, and the market goes down to break the previous low. We are waiting for the pullback. However, you only see a very small doji-like bull bar here. So basically this bull bar is the pullback, even though it is a very small pullback. So you want to trade when you see this signal bar, the next bar. So when you read the market, you want to identify what is the true pullback and then trade accordingly. Sometimes the pullback could be further, sometimes the pullback could be shallow. If this is a shallow pullback, that means the downtrend is very strong, so you should be very confident that the market could go down even further, or even you want to swing your trade. If you enjoyed my video, please don't forget to subscribe, like and comment. You can also go to my channel for more videos. Thank you.